Hey folks, welcome back to another challenge update, and just can't catch a break with this stock. Last week I put in my option orders over here on a Monday, and the next 3 days the stock just dropped. And even though it ticked back up, it was still down $10 for the week, going from about $96 to $86. And my covered calls expired out of the money, obviously, but my 95 put and my 89 put both got assigned. So that means I now own 200 more shares of Alphabet. Today is this green candle on the right, and it's a Monday. It looks like we are going to go back up, but nothing is certain. What's interesting is that last week I didn't really see any news around Alphabet to warrant that kind of fall, but other companies did even worse, like Amazon, down about 12%. I think Google has hit a really strong support level, and I'm going to show what I mean. As I mentioned before, if we look at the weekly chart and use a log graph, what I've done is draw a straight blue line from basically the beginning of when Google went public and connected the low swings. So over here, that was a low point. If we zoom in here, I'm basically making the blue line cross the weekly close of the lowest week. So that would be this red candle right here. The next candle is green and went back up. And that's going to be a trend we're going to see is after the lowest drop of the week, the next candle tends to be green. So that's one point there. And Alphabet continued to go up and it moved higher after the 2008 bottom. And it didn't really touch this blue line again. And remember, this is logarithmic. So the growth, even though it looks linear, it's actually exponential measured in dollar terms. So the next time it fell all the way back to this blue line was during the recession, the really short recession in 2020. And this candle right here, that would be the lowest week that it closed at. Even though the next week it did fall lower, but it closed above and ended at $55. Whereas the previous week, the lowest week, it ended at around 53.30. So once again, we have a green candle following the lowest weekly close the previous week. And of course, for the rest of 2020 and for all of 2021, Alphabet did really well until beginning of this year, where the stock crossed below the 21 weekly moving average, which is this blue line here. And that leads us to right now. And look at how precise the price action is. It came down, it basically touched this blue line, and that was last week. So every bar is 1 week, and this huge red bar where I said Google dropped like $10 in a week, which is very rare to see. It could have kept falling, but it stopped at this blue line. It actually fell below this blue line, which tends to be the case over the last couple of times it did that as well. But it ended the week pretty much on the blue line. And starting out this week, we're seeing a green bar, and the stock is already up about 1.6% today. So to me, this is not a coincidence like that it stopped here. It suggests to me that if the stock were to have a really down week and actually close the week below the blue line, then the stock would be in really big trouble because then it could fall to like $70 or $60. And also, then it would mean that the sentiment would be worse for the stock than in 2008, right? Than the great financial crisis. And people would be more bearish than in 2020 when the economy shut down, people stopped spending money, advertisers pulled back, and there was a lot of uncertainty around that time. So the current economic condition we're in right now is we're probably in a recession and the earnings of companies are likely to come down a bit, but they're still going to be higher than what they were back in 2020. Looking at the ROIC website, we can see in 2020, Alphabet earned $2.96 per share for that year. And we don't have the numbers out for this year yet, but analysts are expecting about $5. So even if we have a recession in 2023 and that number drops to like $4 per share, you can see it's still higher than about $3 per share back in 2020. So 2021 was an outlier. There's no way any company of Alphabet size can grow at this kind of rate every single year. But if you ignore 2021 and think of 2022, 2023, I think those are better comps to measure against 2020. And if that's the case, then I don't really see a reason right now where the next 12 months could be worse than 2020 or 2008. So if that's the case, then the stock will likely stay above this blue line. And because it's sloping upwards, the more time that goes by, the higher that support level is going to be. You can see by January of next year, in a few months, this blue line is going to go to about $90, whereas right now it's about 86. And I've mentioned before how I thought the mid 80s would be like the lowest point that Google would likely go. That was in like a video I put out a few weeks ago. So far, it looks like it's holding. Now, I'm not really sure yet because we still have to wait until this week is over to get confirmation that we did get a bounce. Maybe we'll get a double bottom. We'll have to see. Right now, it's only Monday, so it's really hard to say. Anything can happen. By the end of this week, if we fall below this blue line, then I might have to reassess this challenge because then Alphabet has done something it has never done in its history, or at least over the last like 17 years. So that would be a really big thing. It's like half of my lifetime. However, if by the end of this week we do see a green candle, just like the last couple of times, especially if we can get the green candle to close above the starting point of last week, which is right around the 95.40 level, then that would be really bullish because that's pretty much what happened here in 2020. We had an engulfing green candle that closed above the previous week's open. So that's something I'm keeping a close eye on. If we get confirmation, I am willing to go more aggressive for next week's trade. But let's take a look at what happened last week in my account and see where I'm at. Okay, so the stock dropped from 96 to 86, and I picked up 200 additional shares. What that did to my average cost, though, which is really good, is it brought it down from 107 to 101. Because what I've basically done is buy 200 shares at, I'm using $92 as the average of 95 and 89, my two strike prices. I earned $371 in premiums, and now I have a total of 500 shares. What this means is last week, because the stock dropped so much, and now I have 500 shares. The value of my portfolio in this challenge here was down $5,000. So overall, I am minus 5,900. And you can see by the blue line over here, this is the lowest point in this challenge history. And it's also the lowest point that Alphabet stock has fallen since the start of this challenge. Right now, I think what I'll do is sell a put probably somewhere around the low 80s or high 70s, maybe around $80, because we're getting CPI numbers this week on Thursday. And if that is a disappointment, then I expect another big red candle here. But because the previous 2 weeks, we've already had two large red candles, I wouldn't expect this week to be like an even larger red candle. So around $80, I think, is pretty safe. And by the way, this would be the last 100 shares that I can buy because then I'm up to my limit of the initial $20,000 that I'm investing in this challenge. And I'm already using like a lot of margin already. So eventually I'll have to add on the cost of all the interest that I'm paying on that margin as well. But for the put, around 80, and then for the call, I think we're going to have trouble passing this area in here. You can see there was a lot of weeks in there. So I'm actually going to move to the daily chart and put my call option somewhere around the $96 level. One reason is because it's at the bottom of this channel. So because the stock fell below the range of this channel, when it comes back up, the bottom of the channel will act as resistance. And also there's this 21-day moving average, this blue line, and that's going to act as resistance as well. So this dotted blue line represented Friday. I'm going to make another dotted blue line over here for November 11th. So this represents the week between these two vertical lines. And right now this is Monday over here. So we have Tuesday, Wednesday, Thursday, and Friday. And Thursday is the inflation report. Because we had such a big move last week, like 3 continuous days of just really large drops, I do expect some kind of pullback this week. So we could end the week somewhere at this $95 line again. And I'm using this angle because that looks like how the stock is moving up. If I connect the bottom of these 3 bars here, there's this red bar and these 2 green bars, you can see that's pretty much where we're heading to. And also this angle seems to line up with the angle that Google likes to move up in. You can see it here, 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 kind of over here as well, where it went up really steeply, over here pretty much, over here. So it looks like I'm looking at a range between 95 for my calls and 80 for my put. And I can only do one put this week unless I do put spreads because I don't have the money to buy more than 100 shares. Okay, so looking at the options here for Alphabet, the IV is still elevated. That's nice to see, still 45. Okay, let's do the put side first. So around 80, that's not a lot of premiums. Maybe we'll go 83. That's a 1.2 standard deviation. That would actually bring my ACB down to below 100, which is nice. I'm going to sell that. And then for the call, around 95. I'm going to go with 96 just to be a bit more safe. And maybe I'll sell 2 call options for the 96 strike call. It's not going to be a lot of premiums, but I'm a little hesitant this week to be aggressive with the premiums. Let's go with $43 here. It'll probably be around $40 after commission, and I'll transmit that so that, okay, let's see if this fills. I'll drop it down to 42. So it's basically, I'm selling one $83 put, and I'm selling two $96 calls. Okay, I'll just drop this down to 41 so it fills.
Order filled.
It's just 1 penny less, doesn't really matter. If everything expires out of the money, then I'm going to make about $40, or about $50 Canadian, 55. I'm going to get rid of this channel because we're not really in it anymore. The good thing about higher volatility, as the stock drops more and more, is you get more premiums with options. But the bad thing is it's kind of hard to predict where the stock is going. So hopefully we get back all the way to the mid-90s by the end of this week. But we'll see how the CPI report goes. So thanks a lot for watching, and I'll keep you guys posted in the next one.